Should we move on to who are we going to do next?
Generac.
Yeah, Generac. You know, it's funny, this company, Generac, you know, I haven't seen them lately, but I used to see the commercials all the time for their generators that they do and stuff. And it made a lot of sense, especially me in California. We do have irritates me, we do have a generator, natural gas generator. I bought it a year ago. I'm embarrassed to say I still have not had a hooked up yet. I did buy one in case.
You're going to wait until you need it, and
Yes.
you're going to be like, oh.
Yeah.
'Cause
Ron, why didn't you hook it up for me?
I've thought about, man, I need to get a generator because, you know, here in California, when they shut off your power, I have like, you know, my wife and I, we buy like big bulk beef shipments. And if like my freezer were to not be allowed to run, I'd be screwed. All that money I invested in the cow would be totally wasted. So I probably need to get a Generac generator.
You might have to look. I think they're high priced, but let's look at the company, see if it's a high price or good investment or not. They are in the special industry machinery industry. Shares float on the higher side, 8.3, 94% institutional owned. PE ratio is high. It's 29.2 versus 13.3. Price of sales 2.1 versus 1.3. Price of book value 18.7 versus 418. So that is a positive there. But price of cash flow not so good, 15.4 versus 9.7. The PEG ratio does look good though, 3 versus 29.7. So it does say that you're paying less for the future growth of this company. Moving on to the earnings per share growth over the last year, it was down 2.8%, but the industry was down 4.1%. Sales for Generac were only up 1.3%, while the industry experienced a 135% gain on their sales. 5-year growth rate on the earnings is a 7.6% for Generac and about 3.9% for the industry. Disappointed here. They do not pay a dividend. I thought they would, but no dividend. Look at the balance sheet. Current ratio, very good, 2.2 versus 1.7. Tells me they should be paying a dividend with that much cash there. Debt to equity, 0.6, same as the industry. We do see a net profit margin, 7.1 versus 8.5. Return on equity, not where we want it to be. We like around 15. It's 11.8. And their free cash flow is kind of suffering, $424 million versus $4.2 billion for the industry. So I'm not getting too excited about Generac here.
Well, looking at the current price for Generac, it's $152.78, and I'm kind of blown away by how volatile the stock has been. Looking at the 52-week range, the low here, $99.50, and the high, $203.25. But I'm not going to say that's where the volatility really is. If you look over the last 5 years, it's actually down 41%, but over the last 10 years, you're up 444%. I mean, the stock in 2021, I don't know what the heck was happening, but it went over 470. Looks like it was approaching $500 a share.
Well, that was during COVID, so maybe people were
post-COVID. Yeah, maybe people were buying generators just in case they weren't leaving the home. But I mean, that was still. Yeah, I mean, I guess people were still worried at the end of 2021.
And I see another high year-to-date number.
I mean, looked at year-to-date, another one up 12%. This one has gotten actually 2 upgrades this week by 2 different players.
Okay.
And the one that was kind of interesting to me, gave a little bit more information, was from Baird, and they said the firm is looking at the company as having a number of unique catalysts ahead, including the opportunity presented from commercial and industrial diesel generator sets. So again, is this another potential AI play, so to speak, to generate that power that is needed? And it looks interesting when you're looking at that earnings growth for this business. I mean, you go out to December 2026, I see estimated earnings per share here of $8.23. It gives us a target sell price here of $136.62, so not quite the valuation that we want to see given the current price is $152. But earnings growth is supposed to be like 25%. And then going to 2027, they're looking for earnings growth again of 20%. So, I mean, there is some potential growth here that these analysts are looking for. Maybe, again, an AI play that isn't as prominent as people are thinking.
And I was thinking residential, but you brought up the point that with all the shortages of energy and so forth, that they're also looking at the data centers, the commercial side, everything else there.
Yeah, and I'd be very curious. I mean, I see just on their website, they have residential and industrial right at the top of the page. Yep. So I'd be curious what that split is between those two sectors, how much comes from industrial. And I mean, the other thing to point out as well, as we talk about even these data centers, it might not seem like it, but it might push residential people to buy generators because of electricity prices continuing to climb. So, I mean, this could be a play that could be because of the large push to data centers and the amount of power that is going to be needed to have those data centers actually functioning.
Yep. So,
But again, I wouldn't buy it because
no.
the valuations are still a little bit stretched for where we'd like to jump in.
It looked like it could have some potential, but just not there.
But as I said, I might be buying that generator for my home.
Buy
here
the
pretty
generator,
soon.
don't buy the stock, right? Yeah, at least a small one to put in the garage so that you can at least plug it in.
Yeah, at least plug in the
Yeah, the freezer.
The freezer.